All right, let's dive right into this explainer. If you operate anywhere in the Nigerian financial space, you already know the deal. Back on June 15th, the Central Bank of Nigeria quietly dropped what is arguably one of the most consequential circulars the payments industry has seen in years. We're going to break down exactly what this monumental mandate demands, what it practically means for your digital infrastructure, and how you can actually navigate this massive shift.
January 1st, 2027. We are starting right off the bat with this date because, honestly, it's a ticking clock. It is the exact deadline Nigerian fintech executives are racing against. By this date, payment transaction data generated in Nigeria absolutely must be stored and managed within Nigeria. For institutions that have spent the last decade comfortably migrating all their core workloads onto global platforms like AWS, Azure, and Google Cloud, this 6-month compliance window is incredibly tight. To make sure you actually survive this transition, we've got a lot of ground to cover today. We'll decode the mandate itself, uncover the regulator's true motives, examine the physical reality of the cloud right now, tackle the major migration hurdles, and then finally, map out your exact survival plan. So let's kick things off with part 1, breaking down the CBN data mandate. Now, the circular itself actually packages 3 pretty heavy directives together. First up, you have the big one, the data localization requirement for onshore storage. Second, there's a strict new rule on ultimate beneficial ownership, meaning institutions have to constantly disclose and update records of their significant shareholders. And third, there are new market structure limits. These place strict percentage caps to prevent dominance in both consumer issuing and merchant acquiring. But let's be real here. While those market share caps are a huge deal, the data localization clause is the one causing literal sleepless nights across engineering departments. But here is a really crucial caveat, and honestly, a bit of a sigh of relief. The CBN is targeting payment transaction data specifically. They are not asking you to onshore every single byte of your customer marketing data or your internal company emails. And even better, they're not banning the cloud. You can absolutely still use your global cloud providers, but those providers now have to guarantee data residency strictly inside Nigeria's borders.
Okay, moving to part 2. Why bring the data home? What is the regulator's actual motive here?
Well, it really comes down to a mix of defense and development. On the defense side, you've got oversight, sovereignty, and resilience. Think about it. When your transaction data sits in Dublin or Cape Town, the CBN's ability to inspect it or subpoena it relies entirely on foreign laws. Bringing it home shields the national system from external disruptions. And on the development side, this is blatant, unapologetic industrial policy. By forcing data onshore, the CBN is effectively funneling billions of dollars into local data center construction. It mirrors what we've seen internationally, very much like Europe's GDPR or India's data protection laws.
Let's transition to part 3, the local cloud reality. What does the infrastructure actually look like on the ground? 21. That is the total number of operational data centers currently in Nigeria. Facilities like Equinix's MDXI, Rack Center, and newer players like Kasi Cloud. They represent the entire pool of compliant landing zones for your data right now. Global providers like AWS do have a local zone in Lagos, sure, but it's not a full, comprehensive cloud region. And Microsoft and Google? They don't run one there at all yet. So the burden is falling heavily on these 21 domestic facilities. And this right here highlights the immediate headache. Roughly 80% of those compliant data centers are clustered together in Lagos. Now, in standard cloud architecture, you protect yourself from outages by spreading your workloads across physically separate availability zones. But when nearly all your options sit in a single, flood-prone, grid-challenged metropolitan area, building traditional robust availability zones suddenly gets a whole lot harder. Musa Ganiyu, the CEO of PayVessel, hit the nail on the head with this quote. It perfectly captures the disaster recovery anxiety that is just spreading like wildfire through the industry right now. If your primary local server goes down and suddenly bouncing to your foreign backup is illegal, your disaster recovery story gets very thin very quickly. A total system failure becomes a very real, grave possibility. Which brings us to part 4, the 4 major migration hurdles. The really hard parts of bringing this all home. Hurdle number 1 is untested capacity. Look, the Nigerian system processes over 14 billion transactions a year across cards, transfers, and mobile wallets. Local data centers have grown fast, no doubt, but they're about to face an unprecedented, totally untested capacity load. And as any engineer will tell you, capacity on a glossy sales brochure is very, very different from capacity under a Friday evening salary day load. Hurdle number 2 is migration risk. Adadapo Sabayo, the CTO at Rank, gave a pretty stark warning here. Moving a live financial system isn't just dragging and dropping a few folders. It is literally open heart surgery on a running database.
You're having to re-architect applications and validate data integrity across environments without ever stopping the flow of money. Do this poorly, and you are looking at severe, crippling downtime.
Beyond capacity and risk, you've got hurdles 3 and 4, cost escalation and operational maturity. So many startups have relied heavily on hyperscaler startup credits from giants like AWS or Google, and that's sweet pay-as-you-go pricing. Local operators, they generally charge full commercial rates from day one. Plus, there's an operational maturity gap. Global hyperscalers have spent decades refining automated failover and 24/7 support. Local support teams are improving rapidly, for sure, but closing that gap takes time. And during a midnight incident, support responsiveness is just as vital as raw computing power.
All right, let's pivot to part 5. This is your actual migration game plan. How do we survive this? And maybe even find some upside.
You need to execute this exact sequence systematically. First up, a rigorous data inventory. Figure out exactly what constitutes payment data so you don't accidentally migrate more than you actually have to. Next, audit your contracts. You need to review your current SaaS and cloud agreements against these new residency rules. Then choose your landing zone carefully. Demand actual evidence of uptime under load when you're picking a local or hybrid host. And finally, plan your domestic disaster recovery. You have to design your failover entirely within Nigeria, ideally across geographically separate sites. Because again, bouncing your traffic over to Ireland is no longer on the table.
And remember, you aren't doing all of this in a vacuum. This new localization rule basically stacks right on top of the already strict duties enforced by the 2023 Nigeria Data Protection Act. You still have that tight 72-hour breach notification window, and the penalties for messing this up remain incredibly steep. We're talking up to 10 million naira, or 2% of your annual gross revenue.
Now, take a breath, because it really isn't all gloom and doom here. There are some genuinely exciting strategic advantages to this. Bringing data onshore physically cuts the latency of routing traffic all the way through Europe, which is an absolutely massive win for real-time payments and fraud scoring. Being able to look your customers in the eye and say, your data never leaves Nigeria, provides a huge boost to localized digital trust. Plus, this incoming wave of enforced infrastructure investment, it's going to compound over time. That means better pricing and bulletproof resilience for everyone in the long run.
Ultimately, it boils down to a pretty stark choice. Institutions that treat this mandate as a true architectural transformation, like a real opportunity to build faster, more resilient systems, they are absolutely going to thrive. But the ones treating it as just a last-minute Q4 compliance paperwork exercise, they are going to be the cautionary tales the whole industry is gossiping about next year.
So as that January 2027 deadline creeps closer and closer, ask yourself this. How is your engineering team viewing this mandate today? Are they building a fortress, or are they setting you up to be a cautionary tale? That wraps up our explainer on the CBN data localization mandate. Take these insights, sit down with your team, and start building out your game plan today.